Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Nextera Energy. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, holder, sell recommendation. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock recommendations. So let's get right into it. So the company Nextera Energy is a holding company. The company is an electric powers company in North America, and through its subsidiary Nextera Energy Resources and its affiliated entities is the generator of renewable energy from the wind and sun. Nextera Energy also owns and operates generation, transmission, and distribution facilities to support its services to retail and wholesale customers, and has investments in gas infrastructure assets. Its segments include Florida Power and Light, FPL, and Nextera Energy Resources. Now, Florida Power and Light Company is a rate-regulated electric utility engaged primarily in the generation, transmission, distribution, and sale of electric energy in Florida. Nextera Energy Resources is a diversified clean energy company with a business strategy that emphasizes the development, acquisition, and operation of long-term contracted assets with a focus on renewable projects. Nextera Energy also allows Nextera Energy Resources to help customers identify economic operational pathways for fleet vehicle conversions. It's also important to note that Nextera Energy is the largest developer of wind and solar power in the world, and that has made it quite popular in the market over the past few years. So let's look at some recent news. A month ago, Wall Street Journal reported that the new energy green giants are challenging Exxon and BP. Motley Fool, as you can see up here, said renewable energy will see major growth in 2021, and that this company was one of the stocks that were recommended to buy. And Seeking Alpha reports that Nextera Energy is green and steady wins the rates. That green energy companies over the next few years, it might be a turtle, but it will win the race. Okay, now let's get into some of the fundamentals of the company. So Nextera Energy has a current market capitalization of $164.97 billion and is currently trading at $86.85 a share. Nextera Energy has been increasing its revenues consistently year over year, with $19.2 billion in 2019. Earnings are forecasted to grow about 10.98% per year, and earnings grew about 21% over the past year. Now, it does pay a dividend of 1.66%. Okay, let's bring it back here. So, Nextera Energy has been less volatile than 75% of the U.S. stocks over the past 3 months, typically moving plus or minus 3% a week. The volatility over time is the weekly volatility of 3% has been stable over the past year. Now, the company has exceeded the U.S. electric utilities industry, which returned negative 7.5% over the past year for the industry, and has exceeded the U.S. market, which returned 23.8% over the past year. And there has been no dilution, meaningful dilution of shares in the past year. So what did the analysts say on this one? Now, the analyst consensus is a 20% are a strong buy, 45% are a buy, and 35% are a hold. So most of the analysts out there say this is a buy company out there, and they target the price over the next 12 months with $82.60, with a high estimate of $97 and a low estimate of $69. I know we're kind of a little above that target price over the next 12 months, but I'll get into that, my thoughts on that later. Now, going over a few of the analyst reports in more detail, the Street Ratings report has Nextera as a buy, and they said specifically this is based on the conversion of positive investment measures, which should help this stock outperform a majority of stocks that they rate. The company's strengths can be seen in a multitude of areas, such as the compelling growth in net income, solid stock price performance, impressive record of earnings per share growth, notable return on equity, and expanding profit margins. They feel that the strengths outweigh the fact that the company is trading at a premium right now valuation based on the review of its current price compared to such things as earnings and book value. And I agree with that, and I'll get into that. Now, the Ford Research Equity has Nextera as a hold, and they state the recommendation summary, Ford's hold recommendation on Nextera Energy is the result of their systematic analysis on 3 basic characteristics: earning strength, relative valuation, and recent stock price movements. The company has generated a negative trend in earnings per share over the past 5 quarters, and while recent estimates for the company have remained steady, the company has posted better than expected results. Based on operating earnings yield, the company is about fairly valued when compared to all the companies they cover. Share price changes over the past year indicates that the company will perform well over the near term. Now, I don't think they're taking consideration the macro political aspects of this, but I'll get into that. So they have a hold position. Now, the ownership breakdown of the company, majority of the shares are owned by institutions and the general public, with 78.9% of the shares owned by institutions and 20.9% owned by the general public. And insiders have only been buying shares recently over the past year, with nothing happening in the past 3 to 6 months. Now, let's look at the valuation, profitability, dividend, growth rates, and financial strength of the company. Now, looking at the valuation analysis, because the company is in the utilities, electric utilities industry, and has positive earnings, the PEG and PE and price to book ratios are the most appropriate valuation measures. The price to sales ratio is less instructive than the PEG or PE, since the company has positive earnings. Therefore, Nextera Energy seems expensive with a PEG value of 4.83 times, above the electric utilities industry median for PEG for 4.26 times, but that's not too significantly over. Although their price to earnings ratio is 42.24 times, that is the highest in the industry. So if you just looked at the price to earnings ratio, you would say, yes, they're overvalued. Looking at the profitability analysis, based on their operating profit margin, the company converts a larger percentage of its revenues to profits than most other companies in the electric utilities industry. Furthermore, the company is profitable with an operating margin of 27.77%. Now, looking at the dividends, the company pays an annual dividend of $1.40, which at its current stock price produces a yield of 1.66%. This is below the electric utilities industry average of 4.68%, but it's in line with the S&P 500's yield, and they're projected to possibly increase that. So the news might be coming out next couple of weeks on the increase of $1.40, but we'll see about that. Now, the growth rate analysis, the company grew earnings in face of decreased revenues over the past 12 months. This is a trend that is not sustainable if profits are continue to grow at this rate. However, this result was better than that of the average company in the electric utilities industry, where earnings fell over that same period. And the financial strength analysis, the debt to total capital ratio of 53.35% is in line with electric utilities industry's norm, despite its increase over the past year. The company's quick ratio value of 0.48 times, which shows that there are not enough liquid assets to satisfy current liabilities in the event that the operating earnings are unable to, but I'm not too worried about that. So am I a buy, hold, or sell recommendation on Nextera Energy? Here are my thoughts. The company has steady earnings, it's a stable and growing dividend, and loads of new wind projects in the works. Nextera Energy Partners' efforts to execute long-term strategic objectives and focus on the United States are expected to have boosted its fourth quarter performance. Completion of 2 organic growth projects in the third quarter of 2020 is likely to have benefited its earnings in the fourth quarter, but we'll see in like 2 days. And with the Joe Biden administration looking to pass a massive infrastructure plan in the coming year, I think this company will benefit in the years to come. So based on all the fundamentals, analyst projections, future potential, and macroeconomic political forces at play, I made both a short-term and long-term buy on Nextera Energy. Now, without the projected infrastructure plan, I would have been a hold because the stock is slightly overvalued. Yes, the company is overpriced looking at the price to earnings ratio, but the human psychological factor, macroeconomic and political pressures for increased renewable energy infrastructure in the years to come will bring many good things over the next 1 to 5 years for this company. And that is why I am a bull on this company right now. Now, but there is one downside risk over the next few days, though. If the company does not meet its fourth quarter performance, there could be a slight 3 to 5% decline in its current share price, so be aware of that. The stock is fully valued with already taken into account better than expected earnings for the fourth quarter in 2020. Now, in the future, I project a $100 to $110 share price over the next 12 months. What we have with Nextera Energy is an established utility that has literally taken the renewable world by storm. And in my eyes, this is a no-brainer stock to play the renewable energy boom in the next few years to come. Both growth and income investors should be rewarded. Nextera is also an excellent dividend paying company, although the stock's yield is only 1.7% approximately, is on the lower side of the utility sector. Management is targeting 10% annual dividend growth through at least 2022. So that's a lot of positive news going to come out in the next few weeks. And Nextera's full year 2020 earnings is coming out tomorrow, and its next dividend hike expected in the coming weeks. I feel this one is a no-brainer again, and I see major renewable energy growth in 2020 and beyond. So there you have it, folks. And as always, don't forget to smash that like button down below, and definitely consider subscribing and hit that notification bell if you like to hear daily stock recommendations. Until the next stock update later today, ciao.